If you are thinking about buying real estate in 2026, everywhere you look, the headlines are screaming doom and gloom. Your friends are likely telling you to wait. Online forums are predicting a total market crash. And every self-proclaimed expert seems to agree on one thing: do not buy real estate in 2026. But what if the conventional wisdom is completely wrong? What if, while everyone else is panicking and sitting on the sidelines, you are actually missing out on the most strategic buying and selling opportunities we have seen in years? Before you make any financial decisions this year, you absolutely need to watch this video. I am going to reveal not just why the current narrative is misleading, but I will also uncover the hidden gems and smart moves that could set you up for massive success in the Vancouver market. By the end of this video, you will know exactly how to navigate 2026 like a true industry insider. Welcome back to the channel. I am Olivia. My mission here is to guide you through everything you need to know about moving to and living in Vancouver. This week, we are diving deep into the real estate market, dissecting where we have been, where we are, and most importantly, where we are headed in 2026. To understand 2026, we have to look at the challenging year that was 2025. It was marked by a pervasive sense of negativity. Review after review painted a bleak picture, and the data supported it. We saw a stark lack of demand, with transactions plummeting about 25% below the 10-year average. Simultaneously, supply surged as listings lingered on the market unsold. This perfect storm led to declining prices. Usually, falling prices and declining interest rates sent buyers flocking in, but that did not happen in 2025. Sales continued to slow, which was a sharp contrast to the optimistic start of that year. Our market has historically faced what I call speed bumps. These are interventions from various levels of government or global events that momentarily disrupt the steady ascent of Vancouver real estate. If you look at a long-term price graph, it is a remarkable journey from the bottom left to the upper right, steadily chugging along despite challenges. Over the last decade, we have endured the foreign buyer tax in 2017, the empty homes tax, speculation tax, and flipping tax. Then came COVID-19, and in 2022, a rapid rise in interest rates. Just as things seemed to stabilize in early 2025, a fresh wave of uncertainty hit: a snap federal election, threats of a 51st state from south of the border, and a looming tariff war. This is when the wheels really fell off the bus, and optimism declined steadily from February and March onwards. Despite headlines shouting about excessive inventory, my experience on the ground in 2025 told a different story. Buyers often could not find what they wanted. They had the money and the willingness, but their specific needs were not being met by what was available. The market was saturated with the wrong kind of inventory. There was an oversupply in luxury and investor-oriented properties because those buyers, builders, and general investors had largely disappeared. Conversely, turnkey properties, those that appealed to local families, became incredibly scarce. People moving due to life events like marriage, divorce, or growing families found it nearly impossible to find homes that did not require significant compromise. When these move-in ready properties did appear, they often garnered multiple offers, defying the negative narrative. Many owners of these turnkey homes mistakenly believe they cannot maximize their investment right now. The reality is that many of these homes are still close to all-time highs. If you own a turnkey property, you hold a valuable asset that can propel your next move, whether you are upsizing or relocating. Now, let's look at my predictions for 2026. First, Investor-oriented products will likely face ongoing challenges. In central Vancouver, this means basic cookie-cutter studios, 1 bedroom or 2 bedrooms built to maximize square footage rather than lifestyle. Investors show no signs of shedding their pessimism for several reasons. 1. Global uncertainty, ongoing conflicts in Europe and threats of tariff wars contribute to a feeling of instability. Vancouver usually thrives as a safe haven, but local uncertainties have shaken this foundation. 2. Local uncertainty, the proposed tariff war and the Cowichan land claim decision in late 2020. 5. Injected significant discomfort and misinformation into the market, making investors question the stability of the local economy. 3. Relatively expensive money. While not historically exorbitant, interest rates are higher than what people grew accustomed to, making large debts less appealing. 4. Weak rental market. For the first time in decades, Vancouver's rental market is weak. Rents are dropping because developers shifted to purpose-built rental developments, flooding the market. Additionally, stricter Airbnb rules converted short-term rentals into long-term ones, increasing competition. 5. Alternative investments, with the Nasdaq and cryptocurrencies seeing significant gains. Investors perceive better returns elsewhere. Second, any property requiring a buyer to compromise will be incredibly difficult to sell. This includes homes on busy streets like Knight Street or Southeast Marine Drive, homes with structural issues like the adult-built peat box, condos without balconies, or buildings needing major remediation like rain screening or roof work. Third, I predict downtown Vancouver will continue to struggle. Metro Vancouver no longer has just one downtown. Massive urban development in satellite downtowns like North Richmond, Brentwood, Metrotown, and Surrey City Centre has created an oversupply of urban condo inventory that needs to be worked through. Finally, the luxury market, properties over $5 million, will continue to languish due to global uncertainty and Canadian taxes and bans that have closed doors to foreign investment. The opportunities in 2026 are exciting. First, this is an excellent time to target premium properties. While most buyers are waiting, you will face the least competition for turnkey, family-oriented homes in walkable areas. Buying these in a weak market positions you to benefit hugely when the market eventually turns. Second, this is the perfect time to be upsizing. Many homeowners feel locked in because their home's value has declined, but the more expensive property you want to buy has likely dropped even more in dollar value. For example, if your $1 million condo dropped 5%, you lost $50,000. But if the $2 million house you want dropped 5%, that is a $100,000 reduction. You effectively put $50,000 back in your pocket by making the move now. Always sell your property first to avoid being in a tough buying position, but do not let fear stop you from upgrading more affordably. In summary, while 2026 might appear daunting, a deeper look reveals specific trends. Investor-oriented, compromise-heavy, and luxury properties will struggle due to global and local instability and high borrowing costs. However, properties that genuinely stand out, turnkey, walkable, and family-friendly will demonstrate resilience and strong demand. This creates a significant advantage for strategic buyers to acquire premium assets and for current homeowners to upsize more affordably than in a peak market. Whether you are looking to sell your current property or find your next home in Vancouver, understanding these nuanced market dynamics is critical. Don't let the headlines deter you from making a smart move this year. If you are ready to explore your options, I am here to help. I have guided hundreds of families through these exact decisions, and I can help yours too. Call or text me today to discuss how we can navigate the 2026 Vancouver real estate market to your advantage. My contact information is on the screen right now. Thank you for watching, and I will see you in the next video.